Emma in Switzerland, Understanding Swiss Pensions, a podcast series by Profond. Hello, everyone, and welcome back to Understanding Swiss Pensions, the podcast created for expats in Switzerland seeking clear and reliable explanations about their retirement planning. I'm Emma. To begin with, I must admit something. I recently found my first pension certificate again while cleaning off my desk. When I received it, I remember thinking, this looks important, but I have no idea what I'm looking at. That's why I then just stored it with some other documents.
You're definitely not alone, Emma. Even Swiss employees sometimes put that document aside, promising themselves they'll read it later. I'm Laura. And just a quick reminder before we begin, Emma and I are AI-generated voices. We're here to explain the Swiss pension system in a neutral, educational way, without sales pitches or personal advice. In this podcast, we cover topics that customers often ask about. The answers we give you have been checked by Profond experts.
In the last two episodes, we talked about how the Swiss pension system works and how the second pillar is structured. Interestingly, after episode 2, someone messaged me saying, "Now I finally understand what the second pillar is, but I still don't understand my statement."
And that's why we're going to focus on this one specific document today, the pension certificate. We'll use the pension certificate from Profond as an example, but you'll find pretty much the same information in other documents. Just to let you know, we can only give you some basic information about the pension certificate. I strongly recommend that you clarify your personal situation by consulting a professional advisor.
So, let's begin with this episode about how to read your pension certificate step by step. Laura, what exactly is a pension certificate?
Your pension certificate gives you an annual overview of your occupational retirement benefits, also known as your second pillar. It shows how much retirement capital you have already saved, how your assets have developed over the past year, and which benefits your pension fund would pay out in the event of retirement, disability, or death. Please note that the projected retirement benefits and associated retirement pensions are projections which are not guaranteed.
So it's not just a retirement forecast?
Exactly. It's a complete status report of your insured benefits.
To begin with, at the top, I see my personal details.
Yes. The first section shows the insured person's details, such as their name, date of birth, and marital status. This information is essential, especially for death benefits, so it should always be checked carefully. For life partners who are not married or registered, it's essential that the partnership is reported in advance. Otherwise, benefits may not be paid.
Thanks, Laura. Good to know. That seems very important. Next comes salary data. A lot of people get confused there.
Yeah, because you'll usually see two key numbers. First, your annual AHV salary. This is your gross salary, as reported by your employer. It includes the 13th salary and sometimes bonuses. The second is your insured annual salary.
And that one is lower, correct?
Yes. The insured salary is the part of your income that is actually insured in the second pillar. Depending on the pension plan, a so-called coordination deduction is applied to ensure that the portion of income already covered by the first pillar isn't insured twice. If you want more information on how the three pillars of the Swiss pension system work together, listen to episode 1 of this podcast.
So the insured salary is the foundation for everything that follows?
Exactly, Emma. Contributions and benefits are all based on it.
Interesting. Let's move on to the next section. Financing.
Sure. Here you can see how your pension is funded and split into 3 parts. The first part is savings contributions. These are the funds that build your personal retirement assets. Both you and your employer make contributions. By law, your employer pays at least half. The second part is risk contributions. These contributions finance benefits in case of death or disability. This portion is not saved. It functions like an insurance premium. Third are the administrative costs. These cover the management of the pension fund.
So every contribution has a clear purpose.
Exactly. Savings, protection, and administration.
The next section looks like a bank statement.
That's a good way to look at it, Emma. Here, you can see how your retirement assets changed over the course of the year. You'll find payments coming in, such as transfers from previous pension funds, voluntary purchases, or repayments of early withdrawals. Then, withdrawals, such as those for homeownership or divorce. Your annual savings contributions, both yours and your employer's, and the interest credited to your assets.
And at the bottom of this section,
this is where you can see your retirement assets as of the cutoff date, the total amount saved so far.
then there's a section called purchases.
Right. Purchases are voluntary payments into your pension fund. If you haven't fully reached the maximum retirement assets allowed by the regulations, you can pay in additional money, potentially up until age 70 if you haven't retired by then. And for the first 5 years after moving to Switzerland, a maximum of 20% of your insured salary can be purchased each year. This can boost your retirement capital and often provides tax advantages. But there's one key rule to keep in mind. If you or your employer have purchased additional benefits, the resulting benefits must not be drawn from the pension in the form of a lump sum within the next 3 years.
That's good to know. So purchases are a strategic planning tool?
Yes, very much so, especially for expats with career breaks or international moves.
Now let's talk about the part everyone seems to jump to first, the retirement benefits.
Yes, and it's important to read this with the right mindset. What you can see here are your projected retirement capital and the estimated annual retirement pension based on that capital. These figures are based on assumptions, such as the future interest rate and the conversion rate applied by your pension fund at retirement. They are projections, not guarantees.
Aha. So it's a planning compass, not a contract.
Exactly. It's useful but not fixed.
Let's talk about another important section, the death benefits.
Sure. If an insured person dies before retirement, Profond may pay benefits to eligible dependents. These can include a spouse's or registered partner's pension, pensions for children, and a lump sum payable at death. For life partners who are not married or registered, it's essential that the partnership is reported in advance. Otherwise, benefits may not be paid.
And what happens in case of disability?
Good question. If someone becomes disabled for an extended period, they may receive a disability pension after a waiting period of usually 720 days. The amount depends on the insured risk salary and the degree of disability. Children may also be eligible for a child's disability pension.
So we're already getting to the final section, the additional information.
Yes, this includes important planning details such as buy-in potential, early withdrawals for home ownership, vested benefits at marriage and at age 50, and the projected interest rate used for estimates. It's not the most exciting section, but it's very valuable for long-term planning.
Thank you for your valuable insights. Let me summarize everything again. Your pension certificate shows how much you've saved, how your money has grown, and what benefits you may receive in the event of retirement, disability, or death.
Simply put, Emma, if you take the time to understand this document once a year, you gain real control over your occupational pension. Profond also has its own explanatory page on the pension certificate on the web. You'll find explanatory videos there too. We've included a link to the page for you in the show notes.
That was episode 3 of Understanding Swiss Pensions. In the next episode, Laura and I will talk about what happens to your pension assets when you leave Switzerland.
Yeah, I'm really looking forward to this topic. If you're an expat with international plans, that episode is especially important.
Thanks for listening, and we'll see you next time.